Here's the financial news that could completely reshape your home buying dreams. But there's a catch most people aren't talking about. In a surprising turn of events that has sent ripples through the real estate market, mortgage interest rates have plummeted to their most attractive levels we've witnessed in 3 full years. This dramatic decline marks the third consecutive week of downward movement, creating what many are calling a golden opportunity for prospective homebuyers across America. But here's where it gets controversial. While these falling rates are being celebrated as a victory for everyday Americans, some financial experts are quietly questioning whether this is truly sustainable or just another bubble waiting to burst. According to leading financial news sources, the mortgage market experienced a significant shakeup this past Tuesday, when investors in mortgage-backed securities made aggressive moves in anticipation of the Federal Reserve's widely predicted interest rate reduction. This investor behavior created a domino effect that sent borrowing costs tumbling across the board. The numbers tell a compelling story. The benchmark 30-year fixed-rate mortgage experienced a substantial drop of 12 basis points in just one trading day, bringing the average rate down to 6.13%. To put this in perspective for those new to mortgage terminology, this represents the most favorable borrowing environment we've seen since the final months of 2022, a time when the housing market was in a completely different state. For context, basis points are the financial industry's way of measuring small percentage changes, with 100 basis points equaling 1 full percentage point. So when rates drop by 12 basis points, that translates to a 0.12% decrease, which might sound small, but can save homeowners thousands of dollars over the life of a 30-year loan. And this is the part most people miss. While everyone's celebrating these lower rates, the bigger question remains, are we witnessing a genuine market correction that will benefit long-term homebuyers? Or are we seeing artificial manipulation that could lead to another housing crisis down the road? The timing certainly raises eyebrows. With political promises about reducing costs for American families taking center stage, some critics argue that these rate movements are more about political optics than sound economic policy. Others contend that market forces, not political influence, are driving these changes through natural investor behavior and Federal Reserve monetary policy. What's your take on this mortgage rate drop? Do you see it as a genuine opportunity to finally enter the housing market? Or are you skeptical about the long-term sustainability of these rates? More importantly, if you're considering a home purchase, are you willing to bet your financial future on rates staying low? Or do you think we're being set up for disappointment? Share your thoughts. Are you team buy now while rates are low? Or team wait and see what happens next?